The following is a presentation of TFNN.
'Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the May 12th marvelous Monday edition of today's Opening Bell. On the Trader's Edge, I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a fantastic weekend and, more important, a fantastic Mother's Day. I know I did. Hope you did as well. Let's get our week kicked off with a marvelous Monday. And the best way to start our day, well, that's to have clear outcomes. And my outcome? Well, that's to teach you how to master the tools for trading, and that includes the tools of the mind, because when we master the tools of the mind, well, we become a strategist. This morning, you'll hear me use terms like A to B equals CD. You'll hear me use terms like swing points, Gartley buy, Gartley sell patterns. We may even discuss a butterfly or two, and these are terms what I call tactical patterns. They help us to project future price levels on each of the charts that we look at, on each of the time frames, and tactics are most certainly important, but tactics without strategy, well, that is a recipe for failure, and failure is not an option in my playbook. So no matter what it is that you're trying to master in life, I want you to think like a strategist, because here's the deal. Strategists, they slay the tactician all day long. So let's look at one of our tools to help us think like a strategist. This is a tool I call success breeds success. Chances are you've heard or even uttered these words before, success breeds success. So what does it really mean? Well, here's my take. Here's my take on why success breeds success. It's because of the two most fundamental laws of the universe, that being the law of attraction and the law of inertia. Now, the law of attraction says that like attracts like. You and I, we attract into our life a reflection of who we are. This happens through our thoughts, and it happens through our beliefs. Let's look at it like this. Do you believe that a person that believes they are successful has a better chance of attracting success than a person that doesn't believe they're successful? Why, of course you do. And therefore, how important is confidence in one's success? I'd say really important, and we get to see it really play out time and time again. Now, if you're a golfer, or maybe you're not even a golfer, maybe you spent Mother's Day, towards the 6:30, 7 o'clock time frame, watching the TPC, the Tournament Players tournament. I guess they call it the Players now. I certainly watched it play out with Martin Keimer. He was the guy who won the tournament yesterday. Watching him as he hit his shots on 15, 16, 17, and 18. You could see the confidence or lack thereof waning. Confidence, no matter what it is that you do, is really important. And quite frankly, the belief of confidence is even more important. You know the expression, fake it until you make it? Something to think about. Now, I always mention the law of inertia, and the reason is that the law of inertia, and it's a real key to success breeds success, is because the law of inertia says that it's easier for something that is in motion to stay in motion. Therefore, a strong belief in yourself will continue that motion. Heck, motion, we talk about momentum or what have you. A market that's got a trend that's going, it's easier for it to stay inside that trend than it is to change the trends. We'll take a look at that. We'll take a look at this morning. We'll take a look at gold. Is gold beginning to change a trend? It's going to be something to think about out here. Think of it as, here's what I want you to do. Think of it like this as it applies to some outcome that you want to achieve. 50% of the task is just simply beginning the task. Because once you've done that, once you've begun that, the law of inertia is going to propel you to finish it. Folks, success breeds success. I say find the inertia to begin the process and believe like you've never believed in yourself, and you will attract like you've never attracted before. It is Marvelous Monday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Let's get things kicked off here right now. Dow futures, they're up 62 points, trading out at 16,589. S&P futures up 7.5 points, trading out at 1881. NASDAQ up 22 points, leading the charge the upside. It's trading out at 35.70. Russell 2000 up 6 points or so. King dollar back 10 cents right now, trading out at 79.85. The euro on the move, the pound on the move out here. Goldilocks, so let's start off with Goldilocks. That is on the move. It's trading up $13.70. So, the law of inertia, let's take a look at a couple different things out here as we take a look at gold. Let's take a look at what gold here did overnight in the intersession out here. It got down to that 1377 level. I'm sorry, 1277 level. Maybe it's going to get up to 1377, but it got down to the 1277.70 mark out here. And what was it doing? For another test, in essence, of the swing point, did get down to 1277.40. That happens to be the low of April Fool's Day, of April 1st out there, but close enough. So, it keeps trying to move down. Gold tries to break through that level of support. It cannot do it. It tells you, boy, we've got some bulls that are just simply hanging out around that area. Now, what the bulls need to do is prove their point, and their point would be moving across the 200-day exponential moving average, which right now is priced at 1321.90. I suspect we're going to see that level get tested. Why does Stevie Son think that is the case out there? Well, if we take a look at our 120-minute time frame, look, if a trend is going to change, then a trend is going to first take place. Well, obviously it could first take place on a 5-minute chart, but that's not really where you, or a 10-minute chart, that's not really where you see trends that you can rely upon from the longer-term standpoint take place. I say look at longer-term time frames. And I think a 120-minute chart is a good one. 30 minutes, okay, but 120-minute is a pretty good one. Now, if we take a look at gold, if you're watching us on TigerTV, you see one of the Rhodes Momentum Indicator strategy patterns that we trade out here, and that's the price relative strength divergent pattern. That's where you have price making a low during the time period here. In this case, it was at about 4 o'clock in the afternoon. This was on May the 7th. You had gold pushed down to a price point. Well, let me see what that price low was. 1289.10. But the relative strength reading down there was at the lowest point that we have seen here since that time period. What happened last night? Well, we saw a price move lower, got down to that 1277.70 area. It did it on what? It did it on less relative weakness. Then it was the very key, that very next candle session, that little piercing candle, followed up on the very next session here coming into midnight, that then gave you the reversal, gave you the Rhodes Momentum reversal signal out here. And then, of course, coming into the time frame here of about 6 o'clock this morning, you got a nice little bullish crossover. That says that gold should at least trade up to the last swing point high out here, and that's at the price level of right around the 1315 area. So let's go back. Let's take a look at this chart here. 1315 is going to take us where? Really right up to these swing points. Back in the May 5th time frame out here. If, in fact, we could see gold get above that, close above that, in fact, close above that 1322 level today, that'll be a pretty good indication that what gold wants to do is try to get back into its rising price channel out here. Now, rising price channel, I don't know where that price is exactly. It's probably right around the 1362 area, 1362. You're at 1301.90 right now. So those are the hurdles that gold has to overcome. And why is it that maybe gold is getting a signal or giving us a signal that it, in fact, could do that? Well, I'd say let's go see what hi-ho silver is doing out here, because silver has been a weaker link than gold. If we take a look at silver, nice price move this morning. That's up 50 cents. That's up 2 6/10%. So you do have silver from a percentage standpoint leading the charge here. The key inside of silver's been trading really within 2 swing points. The December 31st swing point, the high of which is $19.83, 82.5 cents out here. So we'll use 1983. Also been trading inside the swing point from June 28th. The top of that is 1963. You're trading at 1963 right now. If, in fact, gold can close above that today, that would be pretty darn bullish out there. You want it to get out of that swing point, because when price is traveling inside of a swing point, whether it be on volume or not, that says it's going to go test either the high or low. In this case here, with price moving down, it's testing of the low. That should be worrisome to anybody that is long any of the metals, or certainly specifically the silver metal out here. Now, the bullish thing with regard to silver is the mere fact that it had a trend line. It broke through that trend line. This is a short-term trend line. This one coming off of the March 14th high. Your next touch point out here that you would use, or that I used, was the April 10th high. We saw silver break above that just slightly. Did that on May 2nd. Then we didn't see a whole lot of follow-through on the next two trading sessions. But what price did last week, on both Thursday and Friday, price came back and tested, in essence, the bottom of, or the top of the trend line out here. Rejected that area. You've got a nice bullish configuration candle signal here inside of silver. If we go take a look at that 120-minute chart, let me see. I didn't take a look at it yet. Let's go see if it, too, had a price relative strength divergent pattern out here. Let's switch over. Give me just a moment here to grab up the silver contract. We'll take a look at the continuous contract. No. We didn't get a price relative strength divergent pattern. That doesn't mean that the move is not real or anything like that. Of course, it's real. It's up 50 cents right now. And the mere fact that we didn't get that as a bottoming pattern, does that bother me? No. Gold really is the big dog out there, and if you get the move on the big dog and silver acting the way that it is, I think that's a pretty nice move out here. Now, in the case of silver, if we take a look at the relative strength reading right now, we're up at the 72 level, and that says you are what? That says you are starting to move into the overbought range. So any pullback from this point forward is going to be really key to monitor, because what happens is you get to an overbought or you get to an oversold range out there. You work yourself off one of two ways, either by moving sideways, which is the more bullish, or bearish. In this case here, we're looking at price moving up, so that would be the more bearish approach, or a slight pullback. Now, a slight pullback says nothing really more than a 0.618 retracement. 0.382 would be the preferable thing. Then, if that's all that you get out here, then that sets up a larger A to B equals CD on the intraday time frame chart. So Goldilocks and silver looking pretty good out here. Light sweet crude right now, that's trading up 75 cents. How about a quick peek across the globe? In fact, we want to come back from this break. We're going to go take a look at the FTSE. It's up 26 points right now, about 0.4%. But I believe that the FTSE is trying to break through a consolidation level, just as the Dow futures are. So when we get back from the break, we'll look at the FTSE. We'll take a look at the Dow right now. The DAX is up 92 points, about 1%. Over in Asia last night, Nikkei off 50 points, Hang Seng up 400, and the Shanghai up 43. 877-927-6648. It is Marvelous Monday. Welcome to TFNN. Welcome to the show. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts.
In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures up 62 right now. S&P still up 7.5 points. And the first chart we're checking in on here is the FTSE. Now, during the break, I went ahead and adjusted the consolidation zone that it had been traveling in. I adjusted it by about 30 points northward. Now, you know, our role here, there's really three primary things that each of us are doing as we're taking a look at trades out here. We're either we're looking at a trend. We're trying to take a look at trends. Trending markets are much easier to trade because in a trending market, right, all you're going to do is you're either going to buy or sell a retracement, something that's retracing down. You're looking for some type of retracement to the upside so that you can get in on that move to the downside. That retracement being either maybe 0.382, 0.618, 0.786. Of course, the preferred retracement to get in on is one that forms a Gartley. In that case, there it would be a Gartley sell pattern. So trading a trending market, you know, that's one of the easier things to do out there. So that's one thing that we're looking for. We're also looking for markets that are consolidated, that are basing sideways. Sometimes consolidations can be rather large. In the case of the FTSE out here, we're looking at about a 430-point consolidation or so. That began back here on October the 11th, 2013. So since October of last year, the FTSE, in essence, has been consolidating in a 400-point move. It's made a high all the way up here Recently, well, back on January 21st out here, it got up to the 68, 67 area. Couldn't bust through that. Came all the way back down to the bottom of the consolidation range. February the 4th, it made a low at about 64.16. That, in essence, sets up that 400-point consolidation. Of course, price moved all the way back up to the upper portion of that consolidation range on February 24th. Couldn't bust it out. Moved all the way down to the lows here. Made, in this case, a 0.786 retracement or so as it made a low back on March 20th. What it's doing here right now today, it's making its way back up to the top of the consolidation level. We'll call a breakout anything a close above 68.65. Now, that doesn't mean 68.66. What you want to see on any consolidation pattern, doesn't have to do this, but what you'd like to see a break of the consolidation pattern. You'd like to see price come back, confirm that it doesn't like it there, wants to stay out, wants to move up to new territory. In the case of the FTSE, consolidations are easy to play. And you can play it in essence. Either you can, if you see price coming up on a light move to the top of the consolidation, you can set a stop with a close, just on the other side, not like by one tick or something. You got to give it some room out there. That's why you want to use the average true range to figure out your position size, and then just simply take an early stop if you're trying to play it to the upside or whether it's to the downside. Either way, use proper position sizing, use that average true range to let you stay in the trade during the day, and just assess your trade at the end of the session to determine whether you want to stay in it or not. So if, in fact, the FTSE can close above 68 to 65 with some type of conviction, you're looking at a move out there to about the 7,200 level. If it can't break it, well, it's either going to do a retracement to the downside or it's going to move all the way back down to the bottom. Now, why is that important inside the FTSE? And I'm going to flip back and forth here. Well, I don't know if I'll have time to flip back and forth. Let me just do this, which is kind of interesting. If we take a look at the DAX here real quickly, you can see the DAX is trading up towards its most recent swing point, April the 4th out here. There was a bit of a trend line that I drew from the top on January 22nd. I also used the high of February 26th out here. We can see that the DAX here is breaking through that trend. It really says that the highs ought to be tested at least, which is the January 24th level at about 97.95 out there. If we take a look at the Shanghai here has rejected lows of its rising price channel. This is the rising price channel. This is a monthly chart taking you back into the 2009 time frame. It has not been able to bust out to the lows out there. If we take a look at the, what else do we have out here looking for any kind of, how about this, the Shanghai out here. If we take a look at the Shanghai, it's actually breaking through its descending price channel here. Now, this is a monthly chart, so we got plenty of time left in the month out here, but it keeps bumping its head up against this descending price channel out here, which could, in fact, be pretty bullish. A quick peek in on the daily chart here for the Dow. Speaking of consolidations, guess what it did on Friday? It closed above its consolidation. This is a consolidation that goes from about 15,911 up to about 16,530. So you're looking at about 450-point move or so. Pretty powerful when we take a look at the Dow. Dow futures may, in fact, be on their way up to about a price level here of 16,876. Right now, you're at 16,593. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 77 points, trading out at 16,660. S&P up about 9, trading at 1887 and change. Composite up 25 points, trading out at 4,097. Russell 2,000 up 6, trading out at 1113. Apple up about $3.65. Microsoft up 17 pennies. Google up $4 out here. Leading the charge, the upside is Netflix. NFLX up about $6 right now, a little under 2%. Pinnacle Foods, PF on a buyout out there, that's up 16%. That's trading at $35.35. Amazing. Amazon up 1%, up $3.78. Tesaro Inc., not Tesoro, Tesaro, T-S-R-O, a entity. I believe this is it's an oncology-focused biopharma company. I believe they got a nice positive result on one of their stage testing out here, up 14%, up $3 and change out here. Rio Tinto Mines up 4%, up $2 out here. SanDisk is up 2%. Verifone, PAY is the ticker symbol, up 8% this morning, up $2.53. Core Laboratories lead the charge to the downside. CLB is its ticker symbol. It is down 14%, off $27 this morning out here. Not a good scene. Insys Therapeutics, INSY, down 12%, off $4. Stratasys, the 3D maker out there, off 2%, off $2. Allegren down 42 cents, not a big deal out here. Hillshire Brands off $1.30. DirecTV off $1. Not a ton to the downside dollar-wise. So the chart on my screen here right now happens to be the June contract here for the daily NASDAQ futures. We're watching the top of the descending price channel being pierced right now. If we can see a close above that with any significance here today, well, first it needs to get above a potential B point of an A to B equals CD to the upside. That is the trading session from April 24th. So what's the key number for us to be paying attention to today, tomorrow, however long it takes, is 36.1825. But right now the key is going to be, can it fight off the bears of that descending price channel out here? That's that red diagonal line going across the top of my screen from upper left to lower right out there. And we'll see. What I'm using here, I'm using the open from the trading session. Well, I use the close of the trading session from March the 5th out there. That was at 37.25. I'm using the close of the session from March 18th. That closed at 36.97. That happens to run right into the open of April the 3rd out there. So a nice little rising or descending price channel out here. We'll see if, in fact, the NASDAQ can get above that. If they can get above that and it stays above that area, that says that 36.94 would likely be its target. That is in the futures contract. Again, we've got the Dow. We'll go back to it. I did this just briefly here, but the Dow here has broken on Friday. It broke through its consolidation area out here. If we take a look at that consolidation, you'll see really two patterns come to fruition or closure right about the same price level. When you break through a consolidation, your measured move is equal to or greater than that consolidation level. So you've got you've got an A to B equals CD to the upside that says 16,877. You've got a measured move that says the 1 to 1.272 A to B equals CD up into about the 17,000 plus range out here. So we do have the Dow futures right now. The key level for them to be paying attention to, I'd have to really say, is the key reversal session. That is from the April 4th trading day. The high there is 16,574. You're at 16,603. And that is a bearish engulfing. That is a key reversal session. Expect that to be resistance. To close above that, old resistance becomes what? Becomes new support. So that is the key number for us to be watching today as the Bulls and the Bears come back from a nice holiday weekend out here. We take a quick peek in on the VIX index. Let's go see what the VIX is doing here this morning. Whoa, really trading lower off of its session lows, but down at the 1247 range out here. Got down to 1188 at this stage here. It's the formation. One would say maybe a hammer candle, but really not. And why does Stevie Son say really not? Because you need to always account for the gaps out here inside of any bars that you're looking at on any time frame in any chart out here. Nonetheless, you got the VIX below the 50-day exponential moving average. We know that is bullish. The market does one of two things when the VIX is trading below the 50-day, and that is either move sideways or continue to rally on out here. Let's take a look at the New York Stock Exchange. Key number to be watching today inside of the NYSE is going to be the number of net advancing issues. It needs 751 or more net advancing issues in order for the bulls to take charge of that market. Right now, you've got net advancing issues of 1667. That means we got net advancing issues we got advancing issues of 2,200, declining to 500. So we've got almost a 4.5 to 1. So off to a good start out there with the New York Stock Exchange. What's the New York Stock Exchange trying to do? It's trying to get up above its highs out here. Now, it recently made a high, 16. Yeah. So it made a high 2 trading sessions ago, 10,677. I did that on May the 8th out there. It closed above that today, would also be bullish out there. So that's a new NYSE, the wider swath of the marketplace. It is not willing to give things up. Of course, if we take a look at the New York Stock Exchange out here, we're going to see it's broken through a 6,000-point consolidation that it has been traveling in. It's come back. It's tested that. It says it wants over time 6,000 points to the upside out here. Let's pull this back. Give me a moment to find it where I got it somewhere right in here. Let's pull this one back here. So if we take a look at the New York Stock Exchange, I guess this wasn't really the chart. Nonetheless, it is up above the 2,000. So it was the last index here to join the party, get above the 2007 highs out here, that being 10,387. In fact, I had a nice conversation with my brother over the weekend. I said, if somebody still says that we're in a bear market, please give me a call and tell me how you come to that conclusion. All the markets are above their 2007 highs out here. There's no A to B equals CD down patterns that exist out here. I mean, we had the NASDAQ composite, after all, get to the low of its 2,000 highs out here. So New York Stock Exchange, here's the monthly chart, the high of 10,000. So if you go from that high down to the low that came in here in March of 2009, down at about the 4,100 level, we were down at that level also back in 2003. That is a 6,000-point consolidation. Says eventually the NYSE wants to get into the 16,000 mark out here. We saw price break through that level back in February. Well, we actually saw it in December. Came back underneath the consolidation area, back below the 2007 highs. Broke up above them with some small candles out here. Came back, tested it again back in April. I don't know why it's got April 11th out here. We're already in May. Nonetheless, it rejected it in the month of April with a close above the 10,387 mark out here. So things relatively bullish inside of the New York Stock Exchange out here. And again, today, the key number to be watching for is net advance in issues, anything above 751. And then you've got the NYSE in full bullish mode out there. The S&P, the Dow, they are in full bullish mode. So that means we want to be paying attention to the NQs out there to see if they can get above their descending price channel. We also want to pay attention to the Russell 2000, right, because that has been a weak link out here. And on Friday, the Russell 2000 rejected its lows. If we take a look at the Russell, let's not look at the futures contract. Let's go take a look at the actual index out here. We might have to draw the lines in because I don't know that I've got them drawn in, but let's go do that anyways. Let's take a look at the Russell 2000. Gapping up here this morning. So it rejected it. It tested the lows from February the 5th. It didn't get down and test the entire low, meaning down to the bottom of the 1080-272 mark set on February 5th out there. But you did have a nice little piercing candle. Remember, when we began the show, we were looking at Goldilocks. We were taking a look at that price relative strength divergent pattern that it had formed. And then late last night, 10 o'clock or so, it had that little piercing candle and had followed through on the very next candle session. Well, in the case of the Russell 2000, it formed a little piercing candle on Friday out there as it was rejecting the swing point here from February 5th. So in essence, it's made a 100% move of a move. We take a look at where is it that the Russell 2000 probably starts to run into resistance out here. Going to be probably hard-pressed inside the index to show you the descending price channel. I would have to say we'll use as a resistance area, looks like the 200 period, no, it's the 50-day exponential moving average. It's the red squiggly line growing across my screen out here. Probably about 1140 becomes some real significant resistance inside of the Russell 2000. Now, we just take a look at bounces here. If we just take a look at the dead cat bounce, the 0.382 retracement off of the high from March the 4th down to low on Friday out here, you'll see that the 0.382 retracement gets you to 1137. So very likely what we have going on here is we're going to see the Russell 2000, a nice counter-trend rally, move up to the 1137 to the 1140 type area. If it can get above that, very significant because that is, in essence, very close to the top of its descending price channel. Inside the futures contract, I think we've got a larger number of co-located opens and closes out here inside of the Russell. Unfortunately, on the futures contract, I've got just a little bit of a delay, a 10-minute delay out here But that's the number 4. We're going to take a look at the IWM. Let's do that here. Let's just simply go set that up and take a look at the IWM, something that folks have easy access to. In this case here, it becomes really easy to draw the descending price channel line. That's all I've got drawn as the top portion here. That's the red diagonal line. That's using the high from March the 7th, I should say the open, which is at 120.41 out there. And then, in essence, I'm using the close on April the 2nd out here at about 118.40. If we take a look at what that equates to as far as a dead cat bounce, the 0.382 retracement off of the high down to the low from Friday, what we'll see here is the price target area about 112.98. That's your dead cat bounce, your 0.382 retracement level. However, if it really moves here over the next couple of days, you're looking at a price move even higher than that. In fact, if it gets above the 113 area, what it'll set its sights on is the swing point back from April 22nd out here. And that's at a price move of a price area of about the 115 range. Volume is going to be the key. Too early in the trading session. We're only 16 minutes in to give you but what's already done 5 million shares. So 5 million shares in the first 15 minutes of trading. That's not too shabby considering that it's going to go trade into a swing point with 43 million shares. So, of course, we know volume is really weighted towards the open end closes out here. But we'll continue to pay attention to the IWM and see what it is going to do. In any event out here, we've got a bounce underway. If we go take a look at the euro, Japanese yen, let's go check in on that here. As we know, that tracks the U.S. market better than anything else out there as far as currency pairs are concerned. On Friday it broke through that little consolidation area out here. This is a consolidation range that's been traveling in since the March 6th breakout. Wide price spread. That is on March the 6th out here. Those lows were taken out. Price has gotten back inside here as we speak right now. So a key level for the euro Japanese yen is going to be the price point of 140.38. If, in fact, it closes back inside that area here today, then Friday's session was nothing more than a false breakout there. Now, there was a nice rising wedge that was in place inside this currency pair. These are the red diagonal lines that are on my screen. A rising wedge typically has a bearish outcome. Well, that's what we saw here when price broke through that level. Now, it fell to the normal area of support. That support being the March 6th level, that breakout. Of course, when you take a look at buying a breakout, just a little trick here. You actually go to the session below. In fact, when you have volume, you go to the lowest volume session within a couple of candles of the breakout. That really becomes your support area. So if we were going to use that same technique, now inside the currency pair, we don't have volume out here. And so we have to just really rely upon our ability to read candle signals and other patterns that are out there. But if we know that in buying a breakout, we go take a look at a stock. If you want to buy a breakout, ideally you're going to see it come back to that lowest volume area. That's where if you can see volume really dry up when it comes back there, compared to the candle session of that breakout area, if it's coming back on light volume, boy, that strong buy signal. Well, if you take a look at the low on the prior session, that is March the 5th out here, 140.17. What we can see is that area here, in essence, really held as a support range out here. So key for the liquidity gauge inside of the market. We already know the VIX is below the 50-day exponential moving average. That is plenty of liquidity for the markets to move higher. Light volume or not doesn't really matter. And if you get the euro Japanese yen, the carry trade out there to get above I'd have to say get back inside that sign of strength would be the more bullish case. That's above 140.38. You're at 140.49 as we speak right now. Let's take a look at some of these stocks here that are popping and dropping. We're going to have to do that when we get back from the breakout here. Priceline is leading the charge. It's up $24. Netflix up 8. Amazon up 6. Biogen, BIIB up 5. Google up 5. Apple up 4. Of course, we know Apple is up above a resistance level, which is now support. When we get back, we'll go take a look at it. At least it was when we looked at it. I guess it's not. I didn't really pay attention to it on Friday out here. But we'll come back. We'll take a look at Apple. We'll take a look at that resistance area, and that is the price point of about $594.59. Trading out at $590. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free...
We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works...
This segment, as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow is up 99 points right now. S&P is up 13. And before we went to the break, we was taking a look at that. I was pulling up the Apple chart. I hadn't looked at it for a couple of days out here. We know that it had formed and a 1.272 butterfly pattern out here. Got just slightly above that area, 597.33. Also, I'm going to pull the chart back. It's a daily chart out here. We know there's some substantial resistance here inside Apple. The swing point back in December of 2012, December 3rd, is what it is dealing with out there. Now, the volume, the downdraft out here was 19 million shares on the following trading session, December the 4th out here. And price has not been able, or volume, we've not seen those volume levels on this rise move up here. So, there's a supply line out here. You've got a supply of sellers that are outpacing the buyers, so you expect to see some resistance here. Now, what Apple did, what's interesting here, it made this candle session on May the 6th. Let me get rid of the Gartley pattern, the blue pattern out here. Let's take a look at it like this. The trading, so we know that what it was doing at that date was making 1.272 expansion of its last set of swing points. Those swing points being the high from December the 5th to the low out here of January 31st. Now, what it did is Apple created a nice little island bottom. That was from the trading session of January 28th through the February 6th area. That's a nice bottoming reversal that was out there. And we've seen Apple, go ahead and move higher. Nice wide price spread, accelerated volume on the trading session of April the 24th out here. Follow through on April 28th. Now, what it did here over the past couple days, which is kind of interesting here, it created another small little island out here. If you take a look at the low that was put in on April 8th, there was 586.40. Gaps down the very next day. The high is 586.25. So you got a 15-cent little gap out there. Then what does it do this morning? It gaps up. The low so far today, 587.40. The high of Friday, 586.25. So, now, is this the same kind of island as the one that was formed down here back in the January time frame? No, but nonetheless, what it does signal to us is Apple's going to go ahead and make another run for that little dark cloud cover candle, the May 16th area, right on 604.41. Volume out there is 13 million shares so far this morning. Wow, 1.6 million shares in 26 minutes of trading out here. If it can take out that high of 604.41, get above that resistance level that takes us back into the 2012 time frame, that sets a target up here at the next area of resistance, which is really the lows of October 5th, right at a price level of about 651.28. At 626, you've got a 1.618 expansion out there, and the Apple bumping its head into a shorter-term rising price channel. So the stock chart for Apple still looking pretty good, especially with that little island that is out there as we speak here right now. If you are short, please use stops. Please use stops. I know we are in the sell in May cycle out there, but if you knew what I knew, and you can know what I know, just go test drive Mastering Probability. Go to the homepage of TFNN.com. All the details on the homepage of TFNN. Just click on my name on the homepage of TFNN.com. 30-day unconditional money-back guarantee. You will enjoy the newsletter service, and you'll enjoy making money along with me as well out there. So, folks, if you are short, use stops. If you are long, use stops. There's only one thing you and I can control in life, folks, and that is our money management when it comes to trading and investing out here. Right now, we got the Dow's up 109. S&P is up 14. This is Marvelous Monday. Thanks so much for joining us. Have a great day. Hope to see you soon, perhaps in about 8 minutes. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.